Making headlines this week. Copper prices near 11-month highs. Investors are honing in on risks to supply at mines and smelters. We have seen pressure, though, on iron ore. It dropped below $100 a ton after Chinese data that painted a mixed picture on steel demand. Our guest says these concerns about the property sector in China are going to remain, and that is going to have an effect on both commodities. We're joined by Reid I'anson, Senior Commodity Analyst at Kpler. Reid, thanks very much indeed for joining us. Start off with iron ore. China, the crucial driver here?
Indeed. Obviously, we've seen a big sell-off in iron ore prices coming into this year. And we think that this trend is likely going to continue moving forward, just given the weakness in the Chinese economy. We think that prices could test the $100 per ton level, say, by the summer, and probably touch $90 per ton by Q3. Keep in mind that a lot of this expectation, again, is being driven by the weakness in the Chinese economy. It's important to level set this expectation, though. Last year, we actually saw a lot of strength across iron ore prices that has flipped to weakness this year. And this is largely driven by the fact that the Chinese steel industry last year actually performed pretty well. The key to remember is that they exported a lot of this steel abroad. And we're not convinced that they can continue this trend into 24. Just given the fact that a lot of countries internationally are quite frustrated because their domestic steel industries are hurt when China pushes a lot of cheap steel into the market.
And that's a perennial story, isn't it? Brazil is one country that's been concerned lately?
Yes, and they're looking at implementing heavy tariffs on a number of steel products. We've seen some movement at the edges to import tariffs, but definitely possible that we see heavier tariffs over the coming months.
What would that mean for example, Rio and BHP? They get so much of their profit from iron ore.
It's been an ironic trade, right? Because obviously Brazil ships most of its iron ore to China. And so last year you had this circular trade where Brazilian iron ore producers were selling into China, and then Brazil was importing steel right back from China. I think that ultimately this is not good for the big iron ore producers. We've seen prices, of BHP and Vale really weaken this year. And again, this trend is likely going to continue in our view.
Oh, yeah, I forgot about Vale. Of course, they have vast mines in Brazil. Yeah, it's interesting. The iron ore, the cost of it has long been a sore point for the Chinese government. With this drop, will Beijing be happy?
We'll see. And I think it's important to keep in mind, right, we have this offset right now where steel exports are likely going to weaken. Obviously, keep in mind that officially the Chinese government is trying to cap steel production at 2022 levels. I think that we're probably going to come in weaker than earlier levels this year in terms of steel production. This is going to weigh on iron ore imports. Again, it is important to keep in mind, though, that they are implementing stimulus that is going to flow through to the investment portion of the Chinese economy, and that could provide a bit of a lift to domestic steel demand this year. But again, we don't think that that's going to offset what will likely be a weakening in steel exports into the global market. And again, that flows through to weakening iron ore demand in China.
I'm sorry, just give me that take again on Rio and BHP stock. Are they vulnerable here if iron ore prices weaken?
I think absolutely. And we've already seen prices across those equities weaken into this year. And I think that further downside risk is on the table here.
Yeah, it is interesting. I mean, we've heard that maybe the big phase of China's infrastructure building is over, and they put in maybe too many cities and highways. We'll probably never know if they did overbuild. Can we turn to copper? It has had a rally, and you would be cautious here, I believe.
Yeah, it's been interesting to watch this inverse, right? Obviously, you would relate iron ore and copper to the industrial side of the global economy here. Iron ore is sold off, but copper prices have surged into this year. This is largely being driven by supply side concerns. The Cobre Panama mine has now been closed due to governmental disagreements with producers there. And also this is flowing through to cuts around smelting in China as well. And this is really helping to push prices higher. However, we think the upside is relatively limited from here, maybe another 3 to 5% gain. Beyond that, you're going to need a new catalyst beyond the current supply side issues that we've seen. And we're not convinced that those catalysts are in the market for the time being.
Is there, I mean, we know all about Cobra Panama, yada, yada, coming offline, but is there a real prospect of a supply crunch in copper, or can the industry crank up unused capacity quickly?
I think that the prospect of a supply crunch is absolutely on the market. Unfortunately, the copper market is not like the oil market, where you have all these shale producers that can come and step in and start producing in months. Copper production takes a long time to bring online, even brownfield projects, right? And so I think that the expectation that you can just bring on and off supply is not really there like it is in other commodity markets, like oil, for example.
Yeah, it's interesting. It just takes, well, it's done on such a vast scale. Are you concerned, though, there's been too much hype about copper? It seems certain we will need more if we expand electrical grids in a big way.
Yeah, I mean, long term, we're certainly bullish copper. The green and renewables built out is certainly there on the demand side. But it's been interesting, right, to watch this kind of year-to-year fluctuation in prices. Ask someone 5 years ago when they were also probably bullish copper, right? And so I think it is interesting to kind of watch this dynamic between supply and demand. But it is concerning just to watch what's happening in Panama now. And it really reveals how just a loss of a single mine can really have a material impact on the supply-demand balance globally.